guys, I'm going to go over my weekly journal this week, a little bit different. I'm going to do a video and go over each of my trading days. This was a week of firsts. I had my worst day ever in dollar terms since I became consistently profitable, and I had my best day ever this week as well in dollar terms. But I did make some mistakes this week, and I want to go over what I did right and what I did wrong each day. So this is Friday. I'm going to go backwards in order. 5-minute chart, 5-year notes, and came in the morning here, and we are in a tight sideways trading range. You can see on the 15-minute chart, very narrow, and it was too narrow for me to take scalps. It was just at 2 times my minimum scalp, which is 4 ticks on this particular market. But I did, one of the things that's been helping me is I go through a checklist in the morning of an acronym, DOTEM, which is basically D stands for draw trend lines, O, which is the first thing I do on both the higher time frame, 15-minute, and the 5-minute. And the second thing I do is look for, the O stands for open gaps. Had an open gap here that happened overnight, never got filled overnight, and then a second gap here. These small colored gaps are automatically drawn by some code that I wrote. Basically, it's looking for this high and the low 2 bars prior. If that is open, then it forms that little shaded area for me, and I'm looking for overnight. This pullback did not fill that breakout right there, so I extend that out and look for the market to come up and test that area, or if it stays open, then we should have a stronger trend down. So that's the O. The T is basically Al's binary decision of trend or trading range. The E is stands for each participant. So and that was something I added this week because I was would get a bias in my head of either a bearish bent or a bullish, and I wasn't considering what the opposite participants were thinking, and that's also something to remind me to do that. And the M stands for my measured move targets. So that has been helpful this week to go through that checklist so I don't miss anything. So basically, I had a little bit of news at 6:30, but we had a breakout here from this tight trading range. The measured move down wasn't that much further. It was only at 117, which is down here. So it came down pretty close to it. I got short on the pullback right before the close, and excuse me, I got short after this bar, 1 tick. So that's such a big bar, I just put a limit order. 1 tick got filled. But when we had this pullback here, I was scalping short here, and since that was my measured move target, I was only going for 4 ticks. I came down with 1 tick from that, reversed very quickly, and then completely retraced this entire big bar. I added a second contract, and I decided to get out pretty much at break even. I didn't like how that, even though I thought there'd be a second leg down, so I got out +3 on this one, -1 on that one, so +2 on that first trade. Got a double bottom. I was looking for a wedge, didn't get a third push down, and then got a fairly strong bullish move filling in this gap here, but in the process it created this open gap that had this small 1 bar pullback that didn't fill. We broke out above this high. I got long at this low, put a limit order at this low, got long. Because this is my first mistake for Friday, because the trend is down. This is the 5-minute or the 15-minute 20 period, and this is a 60-minute. The trend is down, even though that's a double bottom and possibly a lower low major trend reversal. I should be scalping counter trend, and I didn't do that. I would have got out at the high there at 4 ticks. But instead I was holding it for a swing, thinking that we would get leg 1 equals leg 2, measure move target up here somewhere. And we slowly started just grinding. I got added a second contract. It held above, it kept this gap open. It started here, but it didn't go form a negative gap. But as we started to reverse back up, I pretty much got out at break even for the day. So here we have, -3 plus 1, so that's a -2 plus 2 here, so wash for the day. It really looked strong on the 15-minute, but I did not like how much it pulled back. It was well beyond a 50% pullback, and I just got a little nervous there. But I should have scalped out, like I said at the top there, and then look for another opportunity. 5-minute opportunity to rally up. Came up, formed a nested wedge top here, and we had 3 dojis, so these aren't great signal bars. However, if you kind of sum these 3 dojis together, it opened up here, pushed up, and closed at the low. So because it came up and closed at that low, I got short at that close and was quickly scalping lower here. Also, this did hit the measured move target of leg 1 equals leg 2 with that nested wedge, so that also told me that was going to be a high. So, but I was expecting trading range because we came down, made a lower low major trend reversal and came up, and so I wasn't expecting a resumption of the bear legs. That's why I was scalping there. That is the review of Friday. If we go to Thursday, that was my best trading day I've had since I became consistently profitable. Came in the morning, kind of a weak bear trend, but if we look at the 15-minute chart here for this day, remove all these drawings. For this day, a major thing that would have helped me this week if I had watched, or if it would have been available to watch, the 14 B and C videos clearly would have helped me this week. When you have a tight channel and the first kind of major pullback, that's where, when you get a bull breakout, that's where it's going to pull back to, and that's kind of what happened here. So early in the morning we were 5-minute, we were kind of in a weak downtrend, and we kind of looked like it, to me it had a climax move here that was like one of the largest bars on the chart here coming in, and then we had these 2 consecutive really bull bars, big bull bars again. That gap stayed open on this pullback. I got long on that pullback, scalped out, then came up, and because we were at this high, 1 tick below this high, and 1, 2, 3 pushes up and had problems, I scalped short right there. And I think this maybe wasn't the best trade, but I did get a little bit lucky here, and we pushed a little bit higher above this resistance area, but this little trading range, it got stopped again. So you could look at this. This is a tiny wedge. 1, I held up. 2, down, up. 3, and we got a spike down here. Got out at +4. Pulled back. I got short here, but I did not like how strong this bull bar was closing on its high, and there wasn't any follow through. So that made me realize that we were going to go higher. I washed out at 0 on that particular trade. So +3 there, +4, +7 so far. And then once we rallied up here to this high, it came back to, as I said before, that video 14 would have been helpful. The first pullback where this became a channel, a spike in channel on the 15-minute is where it pulled back to pretty much exactly. That was also kind of a leg 1 equals leg 2. measured move target. It's one of the things I like about the 5-year notes. It was really respectful of measured move targets. And I happened to be away from my screen during this bear bar. So saw this bear bar, came back to my screen here, saw this bear bar, and I should have got short there, but I didn't. I got short on the very next one, pulled back again at a limit order at this high. I didn't think it was going to go very far because this bull bar had tails on both sides. It wasn't very strong. Got short again, 4 ticks higher. Got out at +2 on that first, and then +10 on the second. And I could have kept trading here, but right now my targets for the day are 12, and I was well over 12 for this day, so I had my best day so far. But clearly this is a strong trend, and first touch of the EMA, I should have gone short there as well, for at least a test of the low, but I did not do so. I shut it off early that day. And now we will go to Wednesday. Again, video 14B would have helped me here. I clearly was on the wrong side of the market all day today. I don't know what was all day this day, which was here. Came in tight trading range. You could even say this was a triangle on the higher time frame. We broke out of it, and I should have been going long. I mean, clearly we had 1, 2, 3, 4, 5, 6, 7, 8, 9 bars without a bear bar. It's all in long. So why I was shorting is a good question. The thing is I realized it 2 bars later, but didn't get out. I could have got out at +1, or even got out at break even, put my stop there, but I didn't do it for some reason. I was being a little bit stubborn and holding. I think it was because it was touching this resistance high here, and I felt like at least we were going to get a 4-tick pullback, touching that resistance high. But looking at the higher time frame, this was a breakout, and then we kind of put into a tight trading range, but we hardly pull back to retrace that. So this is a wedge, and we're in breakout mode, and I should not have been short here. So so this, we know we didn't cover Tuesday, but this just, I didn't make the same mistakes I made on Tuesday, which kind of saved my ass this day. But shorted again, 4 ticks higher, shorted again, 4 ticks higher, got out at break even on this pullback. But it could have been just an ugly day. And again, to make insult into injury, I did the same exact thing here. I was just thinking this is hitting resistance, and which was that high of that trading range. But if you look at the 60-minute, we instead of hitting that, we just started to just keep going up here, and that was my mistake. I didn't think it was going to. I thought it was going to stop at this level. It just kept going up and up and up and up and up. So finally got my shit together after this, realizing that we just barely touched the EMA here. This is a strong move, and when we came down to touch the EMA again, I got in for a scalp and was finally on the right side of the market there. Tuesday, which was my worst day trading, and it's because I didn't follow my plan of scaling in higher, and it was stupid again, and just kind of could have gotten out at break even here and didn't do it. So overnight we were in a bear channel. Around 5 a.m., 5:15, we broke out of that. I just thought this was going to be, a testing. Again, those videos would have been very helpful, testing where we first started making our pullback here, which it did. So 2 legs up, kind of a measure and move target. So 1 = 2. I went long here because that was the most bull bars we have seen since here. But I made the mistake of not adding lower and scaling out at break even. That was mistake number one. Came screaming down here, broke out. I got short on the dead low. Another problem with that is, look at this bar. It is the largest bar on the screen. It's bigger than this bar, the bare body. That's a climax. The very next bar reversed almost the entire bar. So I added short again. My plan was to add a third short up at 16, which was the high of this, which was this open gap here. That was the only open gap still open at that point, was to add a short at 16, scale out at break even. I didn't think this was a strong trend, so I thought we'd at least get a test of this low, even though that was a climax. So transition from a bear trend into a trading range. I didn't get in again, and I could have got out at a small loss here at break even on the second and -4 on the first. Didn't do it, and only got out here when I started panicking when we saw 3 bull bars in a row. Realized I was on the wrong side of the market. Got a bull trend up again on the wrong side because we were coming back to this high. I shorted that high and got in 4 ticks higher, but I did get out at break even the first chance I got, but I should have been going long here. So I did par this loss a little bit, but it was the worst loss even with that I've had this. So I guess the realization for me is, number one, I wasn't considering this day both sides. What were the bears thinking? What were the bulls thinking? I did realize up in here that this was a climax. I didn't realize it in real time, but later on I did, and I should have added my third contract to basically get me out at break even. I think this loss just messed my mind up, and I should have been going long here, but I did not, or should have walked away because it was at my limit for the day. But this review of this day is where I decided to add in my checklist, what are the bulls thinking? What are the bears thinking? Which is what Al, recommends that you do. How are each of them viewing the market? And if this was a really strong bear trend, we shouldn't have seen, or almost 100% retracement and filling all the gaps along the way. It filled this one equally. If this was a strong bear trend, and this was a breakout, so I should have reversed once we got these dojis. That was a good buy signal, that bull bar right there, but I did not do so. So that's the goal here, is just to basically try to improve every single day and not make the same mistake twice, which I did this week, but nonetheless. Monday, had a decent day Monday. Could have done much better. Recognize that this was a weak bull channel coming in, but we had a pretty strong bull breakout overnight, pulling back one leg, 2 legs down. I got long at the exact spot I should have got long, but I was scalping higher. I should have looked at leg 1 equals leg 2, or on the 15-minute time frame, but I was seeing this high, and I didn't think we were going to get much above that high. So that's why I kind of scalped out a little bit too early. I should have let this run a little bit longer, because the 15-minute was pretty strong. And going up to my profit target here, there was not a single bear bar. There was just dojis. So I recognize it was super strong. Bull bar, doji, and that's maybe why I scalped out, but I could have maybe held that a little bit better. Also, I could have bought this bear bar for a scalp up, and I didn't. I did get long here, And when we tested that low, I just basically got out slightly above break even, but I should have recognized that this, again, going back to video 14C, breakout, tight channel breakout, the first larger pullback, and when you get that pullback, it comes back to that breakout, or that first breakout point, he says in 14C. So you get a spike in channel. So there was basically nothing bearish here. On the 15-minute, there was one indication of, since the breakout, consecutive bear bars. But on this, even on this pullback, you have bear bar, but then a doji bar, and then another bear bar. So it wasn't very strong. And even here, I could have gotten long for another move up, but I did not. So profitable day, but not the best trading that I've had. And it was clearly a recognition here for big bull bars that we were going to go higher, and didn't trade it. So had a profitable week, even with my shitty Tuesday. But the goal is basically to not make the same mistakes twice, especially on days like this where you could have made a killing, just recognizing that it's all in long right here, and the last thing I should be doing is shorting. Alright, let me know if you guys like this video journal.